Nike reported earnings last week and the stock dropped almost 2%. Shares are now down 40% since hitting a peak in 2021. That means Nike is now valued at $168 billion. It's got $10.6 billion of cash and investments and $8.9 billion of long-term debt, so the enterprise value is roughly $166 billion. In its latest report, Nike reported $51.2 billion in revenue for the latest fiscal year, which was an increase of 10%. That's decent growth, but bottom line earnings are suffering from inflation. Cost of sales increased by 14.6%, driven by an increase in raw materials and labour, so bottom line net income shrunk by 16% to $5.1 billion. That means Nike stock is currently valued at 3.2 times revenue and 33 times earnings. Looking at a historical chart, both ratios are near the bottom of their historical range, though they're not necessarily low enough to signal a buying opportunity. Looking ahead, Nike retains a dominant position in what is a highly competitive market. 65% of its revenue comes from footwear, of which there are no shortage of rivals from established brands like Adidas to new upstarts like On Cloud. So the key to Nike's future will be its ability to expand globally, and on this front there was good news. The latest report revealed that sales in China grew 16% in Q4, with a 22% increase in apparel sales. That compares to only a 5% increase in the North American market. This is a good sign that Nike will benefit from China's post-pandemic recovery. In fact, earnings from the Chinese segment was up a whopping 70% on the quarter, while all other areas were down. Longer term, let's assume that Nike can maintain a revenue growth rate of 9% for the next 10 years and get its net income margin back up to 12%. That would see the company producing roughly $14.5 billion of net income in 10 years' time, and a 25 times multiple would put the company at a valuation of $363 billion. Add in a slowly increasing dividend and the annualized return is around 9.2% per year. That may not seem like much, but Nike has one of the strongest brands in the world, and its stock should remain a reliable and consistent performer with a small dividend. It won't make you rich, but I do give the stock a slight bullish rating, but these are my personal opinions, not financial advice, and I do hold some shares in Nike. For more detailed investing ideas, make sure to visit our website overlookedalpha.com.